What in the world is a 2-1 buy down? Yes, that's the new buzz right now as the Fed has been increasing interest rates big time. It's affecting mortgage rates, which is based on the 10-year treasury. So here's an example right now. Lenders are always creative in times like this. And here's what a 2-1 buy down is and how it can help you out right now. So interest rates as of November 16th just hit 6.61% when the previous week on November 10th they were up to 7.08%, something none of us thought we'd see. Please subscribe and like to this channel real quick. And if you didn't watch the first video about interest rates where I give you spreadsheets and charts like this, feel free to watch that afterwards. But back to this one. So right now, 2-1 buy down's the big buzz and stuff in real estate. It's helping people get affordable payments because that's the issue. It's not so much the price of the property, but it's the interest rates and how much it's escalated the price of your monthly payment. So the 2-1 buy down is a great thing. Just like the last example, we're going to do this based on a $500,000 purchase price, 10% down, so $450,000 loan amount you're going to have. And right now, interest rates we're just going to say are 6.61, which they are currently. So year one on this 2-1 buy down, where either the seller, the lender, or even your realtor could possibly pay for this. The buyer obviously can't come from them, but the 2-1 buy down is first year 2 points off your interest rate, so it'd be 4.61. Year two, it would be 5.61. Then year three and on, it goes back to your normal fixed 30-year loan amount, which is 6.61. Hopefully, between year one and two, you're able to refi. I know some financial experts or mortgage lenders are saying that 2023 rates are going to start going back down, might be around 5. I don't see that personally until 2024, but we'll see what happens. I don't have a crystal ball, nor does anyone. So let's just talk about what this does to you. So at this 4.61 rate, your monthly mortgage would be year one, $2,310. Sorry, that's a monthly savings of $567, which is a yearly savings of $6,804. Year two, now you get 1 point off, so your interest rate is going to be 5.61. So now your monthly payment is going to be $2,586, not including mortgage insurance because this is based on a 10% loan. So your monthly savings would be $291, and your yearly savings would be $3,492. So it's helping make this more affordable right now, which is the issue. Then year three, you get set at your $2,877. What this does is it saves you $10,296 in monthly payments over 2 years, which is roughly $500 a month, which is a pretty good deal there for 400 and some change. So basically, what would happen? A lot of people are like, "Hey, let's just try and get the price of the house cheaper, or the townhouse or condo. Let's just knock it off and let's try and get it $10,000 cheaper and try and negotiate that way." Well, that doesn't really help the situation because, yeah, you're getting a house for a cheaper purchase price, but the issue right now is interest rates. That is what's driving up the pricing of houses, or I should say, the unaffordableness of houses is this interest rate. So, just wanted to show an example. Say if you were to get your house for $10,296 cheaper, the savings you have up here, if you're to do that, your new loan amount would be $441,000 as opposed to $450,000. So now your monthly payments are going to be $2,818. Doesn't really help the situation you can see much right now. Would you rather be paying $2,310 a month or $2,800 a month? Second year, you would be paying $2,586. Here, you're paying just your basic $2,818. So people say, well, what happens if interest rates don't go back up for a long time? Well, it's really not that much difference. You're actually in a lot better situation this first one because 28.77 is what you'd be paying monthly, and here you're paying 28.18. So you're only paying what's that, $60 more a month, $59 more. not that big a deal or savings, whereas you're saving a ton here in the first 2 years thinking you're going to be able to refi. A lot of loan officers and programs are letting you refi for free. So based on this, it's going to take you 14.5 years to get the same savings if you're just to ask for a $10,000 reduction in the price. So that's why it's such a big deal right now. Talk with your realtor, talk with your lenders, and say, hey, instead of asking for $10,000 off the purchase price, how about we ask for a 2-1 buy down, and I take that money and actually feel the difference in this right now, as opposed to just, what's this, $59 a month? You don't really feel that, but you're going to really feel $567, and that makes a property affordable. The $291 a month the second year, that makes it affordable, and then hopefully you're able to refi there in the third year. But if not, you're in the same boat pretty much as you would be otherwise. So take a look at this, and I even have one more video coming up after this one. It's just going to talk about waiting, if you're going to wait it out and see what the difference is and everything. So 2-1 buy downs, great thing to talk to your lenders. I believe it's nationwide, that pretty much every lender's doing it. Or if your lender isn't doing it, you should be able to find one in your area. But it's a really smart thing to do right now if you want to purchase a place and get in a house, either because you're tired of renting or just your family needs a place to live because you're moving somewhere. You need to upsize, downsize, sideways size, or whatever. But Joshua Neats, thank you for watching this video. Please like and subscribe. Watch my first video that I just did about monthly payments, and then stay tuned for this next one about waiting. Hey, does it make sense or not? Watch it and see. Let me know what your thoughts are.